the asset account is prepared on these simple principles. Okay, debit when you buy, credit when you sell, but you have to take your time and do it year after year. Okay, good. So when we read this question, the first thing we get regarding buying an asset is we bought the first asset on 1st January 2017. Here we have it. So the first year is 2017, and in that year we bought an asset. So the principle is when you buy, debit the asset account. So this is my asset motor vehicle account, right? So I debit on 1st January 2017. You either bought either with cash or check. If it was on credit, the question would have told us. So here, let's use cash, or you can say your cash book if you don't want to be specific as to whether cash account or bank account. You can refer to your cash book. And we put in the cost of 50,000. Okay. So the important question you should be asking yourself is that all that happened in that year 2019 regarding buying an asset and selling off an asset? And in this case, in that year 2017, we only bought this asset. Nothing again happened. If you satisfy yourself with this, then you balance the year and move to the next year. So since nothing happened in 2017, again, we balance it and move to the next year, 2018. So let's do that. So the debit side is 50, the credit side is 0. So you have to put the balance card down here, which is going to be 50,000. And you use the closing date of the period. So 2017, all other things being equal, 31st December 2017, that will be the end of the year 2017. Now this carry down will be brought down. So let me underline the totals. Very important. So this will be brought down to 1st January 2018. Balance brought down. Okay, 50,000. So you see, we have balanced 2017. We are in 2018. Then you ask yourself the same questions. In 2018, did we buy asset? If yes, debit. Did we sell an asset? If yes, credit. So let's check the question, and we will realize that another vehicle was bought on 1st July 2018. Okay, so 2018 would acknowledge that we are buying an asset, so we'll debit 1st July 2018 cash book. We put the cost 28,000 there. There is no information to tell us that we sold any asset in 2018. So that is all to do in the year 2018. So we balance that year too and move to the next year, which will be 2019. So this is the information you have for 2018 to balance. So let's do the balancing. We have 50,000 plus 28. That is going to give us a total of 78,000. With the debit side being more than the credit side, so we are going to put our carry down here, 2018 here, which happens to be 78,000 as well, using the closing date for the year 2018, which is 31st December 2018. Always remember to make your totals look nice. So let me do that. Okay, so there we have it. So the carry down for 2018 will be brought down on 1st January 2019. Balance brought down, which is 78,000. So you see, we now find ourselves in another year, which is 2019. So we ask the same questions. Did we buy any asset in 2019? If yes, we will debit. Did we sell any asset in 2019? If yes, we would credit. Okay. So let me find out from my students what they are seeing. What information are you seeing? Did we buy asset in 2019 or we sold? Yes, who's going to answer that for me? Yes, Prof. Farmer.
Sell, please, we sold.
We sold, okay. So we sold an asset, and you have to be very careful so that you don't pick the wrong information. So let's look at it. It says that on 30th September 2019, he decided to dispose the asset he bought on 1st January 2019. So he decided to dispose of this asset. So the principle is that when you dispose or sell off, you credit the asset account. So for this year 2019, we'll go to the credit side, put in the date 30th September because that was the date the asset was sold. Please, the narration you give there is disposal. Disposal. Okay. Then the amount you are going to put there, please be careful. Remember this. Always use the cost of the asset. In the asset account, we only use the cost. So when you buy, debit with the cost. When you sell, credit with the cost. So what was the cost of the asset we sold? It cannot be this 30,000, which was realized. This 30,000 is how much we got from selling it. So that's the realized amount or the proceeds, the sales proceeds. If you want to, sales proceeds, how much you got from selling or disposing it. Don't use that figure. Use the cost, the original cost of that asset. And when we trace, the cost of that asset is what? 50,000. So we are going to credit with 50,000. Okay. Again, this is the information that we were given in 2019. Nothing again happened. So you balance it and move to the next year, which is 2020. So let's do the balancing. Now we have 78 against 50. So the carry down is going to be 28,000. That's your balance carry down. The closing date for 2019 will be 31st December 2019. So let's get the total, 78,000, 78,000. Okay, so remember to bring down your brought down, which is 1st January 2020, balance brought down, which is 28,000. So you are now in the year 2020. You go ask yourself, did you buy any asset in 2020? And in this case, the answer is no. Did you sell? No. And if we are paying attention, we realize that 2019 was the only year or the last year any activity happened for the business. So we don't have to continue to 2021, 2022 because these years we don't have any information regarding buying an asset or selling an asset. So normally you end at the last year where the next years there was no activity regarding buying the asset or selling the asset. So that is how you prepare the asset account. Please know this and know it for once that for the asset account, you debit when you buy, you credit with disposal when you sell. In both cases, always use the original cost of the asset. Don't use any other value than the cost of the asset. And again, in preparing the account, make sure you do it year by year. So take the first year, do your analysis. Did you buy? If yes, debit. Did you sell? If yes, credit. Balance it and move to the next year and ask yourself the same questions. So that is how to prepare the asset account as simple as that. In this case, we just had 2 assets. There are questions you can have 3, 4, 5 assets. It doesn't matter. Just look at the years and ask, did you buy? Did you sell? And do the debits and credit. Any question up to this point? Question time. No question. Okay. So who is going to summarize what I have said about preparing the asset account? Briefly, who is going to do that for me? I'm itching to call Prof. Ella because Prof. Ella has been worrying me on WhatsApp to get her some notes that I'm supposed to send her.
Principle to record.
Okay.
To record the assets. Record the assets. So the double entry principle, meaning you are going to debit the fixed assets with either cash or bank.
Okay.
So in this case, we used cash. I'll use cash. Okay. So yeah, you debit the vehicle account, then you credit the cash account. But the cash account isn't really important here, so you ignore it.
Okay.
Then you will, at the end of the year, if no activity was done or performed on the account, you close it.
Okay.
So you use the double entry for closing an account. We all know that.
Okay.
So after closing it, you go to the next year. You'll be given, maybe in some questions, you'll be given the useful life. In some cases, you won't be given the useful life.
Okay.
But in this case, let's say the useful life was like 3 years. So the first year you will close it. If no activity was done on it or was performed on it, you close it. On the next year, you check if they bought more of the assets, or maybe they disposed it or something. If none happened, then you will close it again. On the third year, let's say on the third year it was disposed of. Yes. So on that year, you will you will credit the assets with disposal. Okay. And you will, in recording it, you use the cost of the assets to record it. Okay. So yes.
Thank you. Yeah.
Should I end here?
Yeah, go ahead. You were continue saying something. Go ahead.
Okay, so the date which it was disposed of, like on the date which was disposed of, and you use that date, then you will credit the assets with disposal and the cost of the assets.
Okay.
Yeah, then you will balance it. Thank you.
Okay. Thank you very much, Prof. Ella. I think that is Prof. Ella's summary. If you have a summary you want to share with us, I'll be glad. If not, then the summary is that for the asset account, debit when you buy, credit when you sell. In both cases, always use the cost of the asset, and make sure you do it year by year. So since we are now familiar or getting used to the asset account, let's go to another illustration and look at how we can possibly prepare the asset account. Yes. So let's quickly look into this illustration 8. Okay, so here we're told that Naomi started business on 1st January 2000. The purchases and disposal of fixed assets of her business are as follows. So you have asset A, B, C, and these are the dates on which she bought them. So asset A was bought in the year 2000, 1st January. Asset B was bought in 2001, and C 2002. These are the costs at which they were bought. And we are being told that in the year 2002, there was a disposal. So the year 2002, there was a disposal. And if you check, it was asset A that was disposed in the year 2002. Okay. The 45,000 is how much they sold the asset A for. Rate of depreciation is 20%. You are required to prepare the fixed asset account, and that is our focus, the fixed asset account. So let's see if we can also finish this one here. Okay, so let me copy this account, put it somewhere so that we go through. Okay. I wish you would try it yourselves, but no problem. Let's do it together. Okay, so here we have the fixed assets account. The principle is when we buy, we will debit. When we credit, when we dispose or sell off, we would credit. So at least you should be able to even determine the years you will sell the assets off, so that when you get to that year, you always remember that, oh, this year we sold an asset off. Okay, so we are going to begin from the first year, and all indications in the question suggest that the first year was 2000. So the year 2000, they bought the first asset A, right, at a cost of 250,000. So we go into the asset account and debit. First, let me put the currencies in there for Ghana cedi. Let me set the cedi sign. Are some of you trying it on your own? If yes, let me know now so that I don't worry myself solving it, so that you can do it for me. Okay, so there's the cedi sign. Okay. So Ghana cedi here. Let me copy and put it on the other side. Good. So we record 1st January 2000. We bought an asset. Again, specifics were not given, so you can refer to your cash book. And here, since the assets were labeled, you can also label the assets to make your account look more detailed. So cash book, you can reference asset A, or put A like that there. The cost is 250,000. Okay. So you ask yourself, in that year 2000, did they sell? And the answer is no. The sales or disposal was done in 2002. Okay. And in the year 2000, there was no additional asset bought as well. So it means that there's no other activity to record. So we close the year 2000 and move to the year 2001. That is one thing that confuses students, where they have to balance the year and move to the next year. Take your time and do it. It's very simple. Okay, so if the business is starting on 1st January 2000, it means they will definitely end on 31st December 2000. So the balance carried down is 250,000. So we now go into the next year, which is 1st January 2001. Balance brought down 250,000. So we are now in the year 2001. You ask yourself, did we buy, did we sell? The answer is we bought asset B on 1st January 2001. So cash book, asset B, and the cost is 125,000. Okay, so you ask yourself, did we sell asset in 2001? The answer is no. So that is all the activity we have for 2001. So you balance it and move to the next year. So balancing would have a total of 375,000, meaning our balance carried down is going to be 375,000. at the end of that year, 31st December 2001. Good. So this carry down will be sent to the year 2002, 1st January 2002. Balance brought down 375,000. Then in 2002, we asked, did we buy? The answer is yes. We bought asset C, so we debit. And did we sell? Yes. We dispose an asset. Which asset was that? A. So it means for this particular year, we have both buying and then disposing. So let's record the buying, which was 1st January 2002. So we debit cash book asset C at a cost of 350,000. And then we sold. So if we sold, we have to credit. What date did we sell it? Again, on the 1st January 2002. So 1st January 2002. Disposal. When you sell, you use disposal. Now, pay attention here, because that is another thing that, students mix and then get the account wrong. Put the cost of that asset you sold off. So always ensure to know the asset you sold off. And per the arrangement of the table, this is the asset that was sold off. So asset A was the asset that was sold off. So you do the crediting with the cost of that asset A. And that cost is 250,000. So if you use the 45,000, that will be wrong, because that is the amount they got, the sales process. It's not the cost. Use the cost. So we have done our debiting and crediting. We balance it and move to the next year. So I think we have a total of 725,000. So there will be a difference of 725 minus 250. Please, those with calculator, Poncho, Mr. Mo, my calculator is Obi and Ponche, mommy. Okay, so 725 minus 250. We have 475,000. So that will be the balance carried down at the end of the year, 31st December 2002. So we bring it down 1st January 2003. Balance brought down. At this point, there's no need to continue because no activity occurred in 2003, 2004, etc. So you pause there, right? So are we okay with the asset account? If not, ask me questions, please. Question time. Okay, so if there are no questions, I think I'm going to put an illustration on the page where I'll require you to prepare the asset account for me. Yeah, Professor, question.
Okay, so you prepared the account, but you didn't state the provision for depreciation on the account and disposal of the fixed asset account.
Yes, because those two accounts are separate accounts we are going to prepare, but I want us to take them one by one so that we don't get confused. It can be very confusing if you don't take your time. So when we are good with the asset account, then we now move to the provision for depreciation account, where we would be making use of the methods that we learned, the straight line and the reducing balance method. So for our new members, I think I would share the video on that lesson so that please you go and update yourself on the straight line method and reducing balance. Very simple methods. Okay. so that tomorrow, God willing, when we pick the provision for depreciation account, we can also use the tips that I'll give to make it look simple and more simple. Okay. So, Professor, that is the reason why I don't want us to zoom into the provision for depreciation account, because I feel I'm going to create some chaos if I
Okay, thank you.
Okay. But are we comfortable with the asset account, preparing the asset account? If you are not comfortable, please let me know so that we go back and look at certain few things. Okay, so my students are giving me the vibe, say there is no issue. Okay, I think that is a positive sign. So let me see if I can get a simple question somewhere here for us. Or maybe I'll put something small on the page as an exercise. I love exercises because that gives me feedback that, oh, my students are okay with the things we have discussed. So please don't ever forget regarding the asset account, when you buy debit, when you sell credit, in both cases, use the cost. As a matter of fact, even when you are eating, asset account costs, don't miss that for anything. Let me also indicate to you that there are some questions where you may be given some opening balances on the asset, and I want to believe all of us here can record opening balances. Okay, opening balance where you open the account and then you indicate the balance brought down. Okay, but I think we'll solve one illustration on that when we get comfortable with the provision for depreciation account and the disposal account. Okay, since no questions are coming regarding the, let me see if I can dwell in the provision for depreciation account. Okay, let me see if I can dwell there. Just give you some few tips in there to boost that. Now, for the provision for depreciation account, dear ladies and gentlemen, it is very simple. But again, note that we calculate depreciation at the end of the year. So most of your depreciation calculation will be around the 31st, if the year is ending December, so 31st December. Note, some accounting years can start from 1st April and then end the next year, 30th June. Okay, so you always have to watch out for the question that the years, so that you can tell the closing date and the opening date successfully. Regardless, depreciation is calculated at the end of the period. And here, the period should be 12 months. That's the 1 year we know, the 12 months period. Okay. Now, let me draw, or let me make some specific statement here. Let me note them down. Okay. So every year, so at the end of the year, calculate the depreciation. And then this is the double entry you do. You always credit the provision for depreciation account with this depreciation that you have calculated. Oh, I'm losing my student to network. Okay, I think they are coming back. So if this is your provision for depreciation account, the point is that you calculate the depreciation using either method given in the question, straight line or reducing balance. and you credit. Okay, so at the end of every year, you calculate and you credit the provision for depreciation account. Now, anytime you sell an asset, then you have to do a debit. So let's try to draw some similarities with the asset account. With the asset account, when you buy, you debit. When you sell, you credit with the cost. Now, for depreciation, every year you calculate and credit provision for depreciation account. So every year, that's what you'll be doing. But when you sell an asset, you debit provision for depreciation with the accumulated depreciation on that asset. And I think my new members are saying, what is the meaning of accumulated depreciation? So for instance, if you bought the asset in the year 2000 and you have depreciated it 2000, 2000, 2001, 2002, 2003, and you sold it in 2003, the accumulated depreciation refers to the depreciation you have charged on the asset since the first year it was bought. So 2000, 2001, 2002, and 2003 added together. That's the accumulated depreciation. But like I said, I don't want us to be getting confused. So for now, let's focus on the asset account. So this session is ending. Check the main page. I'm putting an exercise there. Please answer in the next 20 minutes and submit to your personal pages. Thank you very much for making this class a nice one. So exercise starts and will end in 20 minutes time.